The International Monetary Fund has reiterated its view that South Africa's public debt level will not stabilize as the Treasury has projected. Instead, it will rise to 88% of the size of the country's economy by 2030. That's unless government implements tighter fiscal policy. This comes as global debt levels are likely to rise. The IMF's latest fiscal monitor warns that worldwide borrowings could reach levels last seen in World War II. That's as the globe deals with the ripple effects of tighter and more volatile U.S. market conditions. The fund believes international public debt could increase 2.8 percentage points this year. That would be double last year's estimates and push the world's debt level to above 95% of global GDP. By 2030, the IMF says global borrowing could be almost 100% of the world's economy. Inflation has slowed. CPI fell to 2.7% year-on-year in March. That's from 3.2% the previous month. The latest reading puts inflation at a near 5-year low and is outside the bottom of the Reserve Bank's target range of 3 to 6%. Capitec has grown in popularity. South Africa's biggest bank by customer numbers has attracted even more clients. During the group's 2024 financial year, the bank added about 2 million new customers. This takes Capitec's active client base to 24.1 million. This helped boost earnings. For the full year, headline earnings rose 30%. A total dividend of 65 Rand 10 cents has been declared. That's an increase of 34% on last year's payout. Looking ahead, Capitec says it will be launching a number of new credit products in the coming year. These include a secured home loan product through a special purpose vehicle with SA Home Loans and a repay as you earn loan for multiple income earners and SMEs. Quilter has reported a strong first quarter. The wealth management firm's core net inflows rose 181%. CEO Stephen Levin says the results demonstrate the strength of the group's dual-channel distribution model, but the company's outlook is cautious. It's noted significant volatility across all asset classes as bond and equity markets react to proposed U.S. tariffs. And as a result, Quilter says the forecast for market levels and interest rates is more uncertain. Barloworld's buyout looks set to go ahead. That's after the Public Investment Corporation agreed to accept a standby offer and sell its 22% stake in the equipment company for 23 billion rand to Newco. But this comes with a condition. Newco must implement a 13.5% broad-based black economic empowerment transaction in Barloworld after it delists from the JSE and A2X. The firm has accepted this and says it will proactively and voluntarily offer the implementation of the BEE deal to the competition authorities as a merger condition. Newco was created for the takeover bid and is owned by Barloworld CEO Dominic Siwela, his family, and by Gulf Falcon, which is owned by the Saudi Arabian Zahid Group. Afrimat has warned of a financial knock. The mid-tier mining and materials company expects full-year headline earnings to fall as much as 90%. That's as changes in the iron ore market severely affected the group. Losses from cement and a weaker-than-expected performance from anthracite also weighed. The market has punished Aspen. Shares in Africa's biggest pharmaceutical manufacturer plunged today. That's off the back of news that a contractual dispute could slash annual core earnings by as much as 2 billion rand. Aspen hasn't disclosed the company, but says it relates to a manufacturing and technology contractual agreement for mRNA products. The firm's counter fell by as much as 33.2% following the announcement and ended today's session at 30.71% in the red. Foresight has inked a deal to buy Sage HR and payroll partners X4 Solutions and X4 Technology. The deal carries a price tag of more than 42 million rand. The acquisition is expected to expand Foresight's digital enterprise ecosystem and strengthen its presence in the workforce technology sector across Africa. The market welcomed the news, sending the shares up over 6% after the announcement was made.